So this chapter talks about inventory control, asset and store management, and distribution. So inventory plays a very critical role in most organizations, and it forms part of the working capital in most organizations. When we talk about working capital, we are talking about the current assets, and inventory forms part of the current assets. Most organizations fail because in one way or another, they do not take into consideration the inventory in that organization. Inventory can take different forms. For example, we can talk about inventory as a raw material. And remember, inventory as a raw material, these are materials that are in their raw state. They have not been processed, or value addition has not been done to those products. Inventory can also take the form of work in progress. Work in progress in the sense that this is inventory that is between the raw material and the finished product. For example, if you are preparing in production, this is very common in production. Maybe you want to produce a certain product, but because you have not already produced that product, then we say that inventory is in the stage of work in progress. You are still doing work on it. Then inventory can also take another form of finished product. So once you do value addition on these products or the raw material, you do some value addition, the end product is what we call finished product. For example, if you walk into a supermarket today and you wanted to buy milk, the milk that you are going to select in that supermarket is a form of a finished product because it has undergone some processes until it has been produced. Then we also have other materials like consumables, and consumables are inventory that are required to kickstart or to facilitate the production process. For example, things like oil. Oil is a consumable because you require the oil to lubricate the machines so that they can work effectively. However, the oil is not part of the finished product, but it is very, very critical. Then we also have material repairs and operation. So these are spare parts that are required when you want to maybe fix a machine that is not functioning. They also form part of the consumable because they are very critical. So most organizations fail because of the issue of inventory, in that they have not been able to maintain optimum inventory levels. And one of the reasons that has been attributed to this fact is that the issue of pilferation, where employees like stealing products from the store. And remember, the more you steal, then it means you will not have enough money for purposes of paying your employees and other issues. Therefore, it is very important to be very thorough when you're dealing with inventory. And one of the attributes for successful inventory control is the issue of accuracy when doing data capturing of the inventory. And remember, we also recommend that organization is not supposed to hold a lot of inventory in the organization, because you will be tying up your capital and you might end up not having money to do the operational activities or the day-to-day operations of the business. So what are the objectives of holding inventory? Remember, when we are talking about holding inventory, we are talking about optimum inventory that is held by the organization. So you're not supposed to put overstocks or understock. You need to have at least optimum stock. So one of the objectives is to avoid losses of sales. Sometimes you get unplanned demand. And if you have unplanned demand, then it means the inventory that you held will play a very critical role, because customers will always want items. And whenever they don't get those items, then they will always look for alternative ways of dealing with or getting those items. Therefore, you need to have at least some items held in your warehouses or stores. Then the other one is to gain quantity discounts. Some organizations always want to buy in bulk so that they benefit from what is called economies of scale, where they can be able to get discounts, both quantity discounts or price discounts, depending on the agreement with the various suppliers. So they always like waiting until they buy in bulk. Then the other thing is to reduce order cost. Remember, ordering is very costly, and the cost can be in terms of transportation and other hidden costs that you don't know about. Therefore, most organizations want to hold inventory so that they avoid cases of ordering in smaller quantities for purposes of ensuring that they save, at the end of the day, the transportation cost. Then the other one is to achieve efficient production run. And when we talk about production, remember, production is a continuous process. And depending on which production method you're using or approach of production that you're using, it is always important to have or maintain the production level so that you don't have at any given time stock out of a particular item. And one of the ways to achieve this efficient production is to be able to hold inventory within the organization. Then the other thing is to hedge the organization against price fluctuation. Remember, in the market, the forces of demand and supply are the ones that really determine the prices of commodity. And as an organization, then it is very important to be able to hedge yourself from these fluctuations of prices. And that is why most organizations tend to buy products when the prices are low, so that they can hold those products and later sell them when the prices stabilize. And one of the reasons is to be able to maximize when it comes to issues of profitability. So what is the responsibility of an accounting officer with respect to inventory management? Remember, we said an accounting officer is not an accountant in the organization, but the accounting officer is the person in charge of that organization. In simple terms, we can say an accounting officer is the CEO of any given organization. Or in the ministries, we say an accounting officer is the principal secretary of the ministries. So what is the responsibility of an accounting officer? Number one is to set various measures that will help to eliminate issues of theft, security, and safety within the organization. Then the other thing is to transfer receipts of inventory to or from another public entity. So you can easily transfer products from one entity to another entity. Then ensure items are not lost or destroyed or damaged within the organization. They also ensure proper management of inventory, which is obvious, and avoid cases of wastages in the organization. Then avoid cases of locking up your funds by buying dead stock. The moment you buy dead stock in your organization, then it means you are tying your capital, because maybe a product is only used once after maybe 4 months, but you have a lot of items in the store. Then that is one way of holding your capital. Then the other thing is to implement management and inventory control softwares. So you implement some of the softwares that can be used within the organization. Then issues of misuse we've talked about. Employ and deploy qualified officers to manage inventory. So they hire the services of qualified personnel who are going to implement the vision of the organization. Approve annual procurement plans and budgets. That one is obvious. And also come up with various committees. For example, the disposal committee and other committees to work in those areas. Then we also have the responsibility of the head of procurement unit. And remember, we said a unit is another name for a department or a function. So sometimes you might get a question in exams that tells you to give the responsibilities of the head of procurement function, or the head of procurement department, or the head of procurement unit. So they are all one and the same thing. So an officer is appointed to be in charge of the store. So you must have a person who is in charge of the store. Can either be the head of the procurement unit. All store purchases are actually received, recorded, and taken in charge. So the person is in charge of all the receipts and all the issues in the organization. They also organize inspection of stores, store equipment or items. And they also look at the various ways of improving the operations within the store so that we do not suffer cases of deterioration of inventory. They also do some analysis of inventory so that you do not have overstocks and understocks within the organization. Then we also have a store officer who reports to the head of procurement. Just a minute. So remember, we have a store officer who is in charge of the warehouse or the storerooms or various sub-stores, depending on the structure of a given organization. So they are the ones who look at the conditions. They do some housekeeping to ensure that everything is up and running. They also do reports most of the time, and they are reporting on issues of inventory that maybe looks at the damages or the leakages or the loss or the unserviceable parts in the store. So their work is to maintain a report for that purpose. They also look at issues of if items are properly stored and inventory does not in any way get affected. Issues of preservation also, they also ensure that all items are preserved well so that you do not have cases of maybe rodents interfering with inventories. And the other ones are just the normal functions that we do. They also look at the labels, whether items are labeled properly, where we have items that are explosive in nature. So they need to separate from other items and also label so that those areas are quarantined where people are not supposed to go there and they are restricted access. So let us look at store management and store control. So we need to understand the various terms as used in store management and stock control. So one of the terms is the stock control, and this is the process of maintaining of stock at the appropriate level. And when we talk about level, we are talking about the maximum level, the minimum level, and the other levels. The main focus of this is to ensure that customers are satisfied at any given time at minimum cost. Then the other thing is lead time. And lead time is the time between when an order is placed and when an order is received. So that time must be very, very short. The shorter the lead time, the better for that organization. Then we also have what is called buffer stock or reserve stock, or some people might say safety stock. So this is an extra stock that will be in the organization so that in the event we have unexpected demand, then that buffer stock will be able to cover that so that customers don't feel dissatisfied. Then we have what is called the due-ins. Due-ins, these are orders which have been placed, but the deliveries have not been made. So you might place an order to a supplier, but the supplier has not yet delivered. So that one we say those are due-ins. Then we have due-outs. These are items which have been requisitioned but cannot be issued because they are out of stock in the store. So you issued items or you have requested items from the store, but these items are not in the store. Therefore, we are saying that those items are due outs. Then we have the reorder level. This is the level in which the organization needs to replenish their stock. This level triggers the organization to do a new order for that specific item. And remember, reorder level is normally done automatically. Once the quantity of reorder is reached, then the system will be able to trigger. The system will be able to trigger a new order. Then we have the minimum stock level. This is the quantity of stock below which stock should not be allowed to go or to fall. Once it falls this minimum level, then the next level is the danger level, the red level, which is very, very dangerous. Once the stock is below the danger level, then we say the item is on stock out. Then we have the maximum level. This is the level in which stock is not supposed to exceed. If it exceeds this level, then we are saying that this organization has overstocked. Then we have the provisioning period. This is the duration to be considered to be covered by the new order to be placed. So the provision, you need to provide some space before which a new order should come. So you need to provide that allowance. Then we have contingency reserve. These are special extra stocks which may be authorized from time to time to meet such unexpected calamities. So you need to have contingency plan. In the event we have something that is beyond your control, then at least you have some reserves. So what are the categories of stores? Number one is permanent items. So these are items which have a long life and also are expensive. So these are items that have a long life. They take a longer time in the store. Then you have consumable items. These are items that are consumed maybe at a period of maybe less than 6 months or 1 year. No? So those are consumables. Then we have expendable items. These are items that are procured and cannot be classified as permanent or consumable and can be placed in a class of their own. So these are expenditure items. So you can't classify those items. They can either be permanent or consumable expenses for purposes of internal use in the organization. We have other classifications like administrative and stationery supplies. These are items that are going to be used basically in the office for administration purposes. Then we have shelf life store items. These are items that are characterized by an expiry of less than 5 years, and they must not go beyond that period. For example, we are talking about drugs or chemicals. They need to have a shelf life of less than 5 years. Durable store items. These are items that do not have expiry dates, such as spare parts. So spare parts are an example of durable items. They do not have expiry dates. Then we have foodstuffs and other sensitive perishable goods. These are items that are perishable in nature. That is, they can be contaminated. Then we have fuel and lubricants. And lastly, we have assets such as store and that are of capital nature. So these are the items that take larger amount of capital to buy. For example, machinery, vehicles, etc. What is the receiving and recording of goods? What is the procedure for receiving? The procedure is very simple. Number one is goods are received in the physical store and posted to the approved system. Then the goods are stocked systematically according to their store layout, or bins, or racks, or even floor, depending on your structure. Then the goods are identified and marked to aid identification. The store should remain under lock and key. So that is the physical procedure. Then we also have the other procedure of ensuring that these items are entered in the system and a goods receiving note is generated. So once a goods receiving note is generated, then it is then forwarded to the accountants who will come up with a voucher number for purposes of payment of those items. So different organizations have different receiving procedures, but they differ maybe a little bit, but the process is still the same. It's very the same. It also depends with the farm or the industry. What are you dealing with? We also have items that need to be inspected before they can be entered into the system. Some items also require testing or chemical analysis. For example, if you're receiving drugs, also need to do your inspection using what is called chemical analysis and maybe and others. So the system, that one I know you know. Store management. So for you to manage your store well, you must ensure the following. Number one, the store must be stored in a secure area under lock and key. So make sure once you receive the items, then you need to lock them. You have those items that are very costly or high risk items which need to be locked. Otherwise, you might be experiencing cases of pilferage and theft. Then you have proper insurance must be taken for the items. So once in a while, it is very important to insure your items so that in the event of any peril or anything that happens, then the organization or the insurance company can indemnify the risks. Then only authorized personnel should be allowed in the warehouse. So you need to only allow people in the warehouse. Inventory must be well arranged for purposes of taking into account. Then what is the issuing procedure within the organization? Issuing, remember, is done internally in the various user departments. So once the user department, they fill what is called a requisition note, which is authorized by the head. The requisition is then forwarded to the store department will issue the items. Once they issue the items, they will generate what is called an issuance note, storage issuance note, to ascertain that those items have been issued, and that note must be signed by the user to ascertain that indeed they received those items. So the process is the same across various organizations, and very important. So I think I will stop there for today. When we come next, we shall talk about the disposal procedure. We summarize, then I'll go back to contracts, so that I'll also summarize. I want us to finish so that we can at least revise some 2 to 3 papers before you can sit to exams. So